Stop whatever you are doing right now and look at your calendar because Sunday, February 1st, is not just another day on the schedule. It marks the official start of three critical rule changes that will directly impact the bank accounts, travel plans, and tax filings of every single senior and retiree in the United States. We have been tracking the updates from the Social Security Administration, the TSA, and the IRS for months. And while we often talk about these changes as things that are coming soon, I am here to tell you that soon is over. The deadline is this weekend. When the clock strikes midnight on Saturday, January 31st, we enter a new enforcement period that changes how you get paid, how you get on an airplane, and how much of your hard-earned benefits you get to keep from the taxman. If you are sitting there thinking that your Social Security check is on autopilot and nothing ever changes, you are walking into a trap. Rule number 1 involves a payment blackout that will leave millions of people with $0 on the first of the month. Rule number 2 involves a new fee at the airport that targets seniors specifically. And rule number 3 is a hidden tax calculation that could cost you thousands of dollars if you file your taxes next week without knowing about it. This is your urgent warning. I'm going to walk you through all 3 rules step by step so that when Monday morning comes, you are the most prepared person in the room, not the one panicking on the phone with the government. Let's begin with rule number 1, which is the most immediate threat to your monthly budget: the February 1st payment blackout. You have spent your entire life being conditioned to believe that the first of the month is payday. You pay your rent on the 1st. You pay your mortgage on the 1st. You buy your groceries on the 1st. But in February 2026, that rule is broken. Because February 1st falls on a Sunday, the Social Security Administration is legally prohibited from sending supplemental security income payments on that day. They are also skipping the standard payment for those who usually get paid on the 3rd if they filed before 1997, moving it to February 3rd in some cases, or strictly adhering to the Friday rule for SSI. This creates a massive confusion. Here is the new rule you need to memorize. If you receive SSI, your February payment is actually arriving this Friday, January 30th. This means that on Sunday, February 1st, no money will move. If you check your bank account on Sunday morning expecting a deposit, you will see nothing. The danger here is not that the money is missing. The danger is the double-check trap. Because you are getting paid on January 30th, it will look like you have extra money in January. You might see your regular January 1st check and this new January 30th check in the same month statement. It is psychologically tempting to treat this Friday's deposit as a bonus. You might think, "Oh, I have extra cash, I can treat the grandkids." No, that money sitting in your account this Friday is your lifeline for the entire month of February. If you spend it this weekend, you will have absolutely no income until March. This rule change effectively creates a 30-day gap where you have to survive on what you have in the bank right now. You need to pay your February rent this Friday. Do not wait until Sunday. Pay it the moment the money hits. Secure your housing first. This schedule shift also affects those of you who receive both Social Security and SSI. This is called concurrent benefits. Usually, these payments are staggered by a few days. But because of the weekend rule, they are crunching together. You might see your SSI on Friday the 30th and your Social Security on Tuesday the 3rd. That is a lot of money hitting in a very short window. It creates a wealth effect, where you feel flush with cash for about 72 hours. Scammers know this. Rule number 1 isn't just about the date, it's about the target on your back. Starting this Friday, scammers will flood your phone with texts claiming there is a schedule error and asking you to verify your account to release the Sunday payment. There is no Sunday payment. If anyone texts you about a Sunday payment, they are a thief. Delete the message. The rule is simple. SSI pays Friday. Retirement pays later. Sunday is a dead day. Memorize this, and you won't be a victim. Now let's move to rule number 2, which is directly connected to the viral passport warning we discussed earlier. This is the travel identity rule, and it enters a new phase on February 1st. For the past year, the TSA has been lenient. If you showed up to the airport with a non-compliant driver's license, they would often let you through with a warning or a quick manual check. Starting February 1st, 2026, the soft enforcement period officially ends. The TSA is rolling out the Confirm ID fee protocol at major airports. This rule states that if you do not have a real ID or a valid passport, you may be subject to a $45 verification fee to enter the terminal. This is not a tax. It is a service fee for the manual labor required to verify your identity without the proper card. This rule hits seniors the hardest because seniors are the demographic most likely to have skipped the Real ID upgrade. You figured, I don't drive much. I don't need the star. Well, now that decision costs $45 per trip. But rule number 2 goes deeper than just the fee. It involves the exact match mandate. Starting in February, the automated systems at airport security are being updated to stricter matching logic. This means the name on your boarding pass must match the name on your ID exactly, character for character. In the past, if your ticket said Robert Smith and your ID said Bob Smith, a human agent would wave you through. The new biometric scanners do not understand nicknames. They do not understand Bob. They only understand what is in the database. If there is a mismatch, the gate will not open. You will be sent to the problem resolution line, which can take an hour. For women over 60, this is a nightmare. If your driver's license has your maiden name as a middle name, but your airline ticket doesn't, or if your passport has a hyphen and your ticket doesn't, the machine will flag you. Rule number 2 is audit your names. Take out your license, your passport, and your frequent flyer profile tonight. Do they match perfectly? If not, you need to change your airline profile to match the ID exactly. Do not try to change the ID. That takes too long. Change the ticket. If your ID says Mary Elizabeth Jones, your ticket must say Mary Elizabeth Jones, not Mary Jones. This simple check can save you from missing your flight and losing hundreds of dollars. Let's pivot to rule number 3, which is the most financially dangerous rule of all because it happens silently. This is the provisional income rule for the 2026 tax season. Tax season opened yesterday. Millions of seniors are gathering their documents. But here is the new rule you need to know. The thresholds for taxing your Social Security benefits have not changed, even though your benefits have increased. This is called the tax torpedo. In 2026, because of the 2.8% COLA you just received, your income is higher. But the rule says that if your provisional income exceeds $25,000 for a single person or $32,000 for a married couple, up to 50% of your benefits are taxable. If you cross $34,000 or $44,000, up to 85% is taxable. Here is why this is a new warning for February 1st. The IRS has updated the worksheets for this year to catch underreporting. In the past, many seniors ignored small amounts of interest income or side gig income. But starting this tax season, the IRS is receiving 1099K forms for anyone who earned over $5,000 on platforms like eBay, Uber, or even Etsy. If you are a retiree who sells antiques or does some consulting to supplement your check and you made $5,100 last year, the IRS knows. That $5,100 is added to your provisional income. This extra income might be just enough to push you over the $25,000 or $32,000 cliff. Suddenly, your Social Security check, which was tax-free last year, is now taxable. This can result in a tax bill of thousands of dollars that you didn't plan for. Rule number 3 is, do the provisional income math before you file. Take your adjusted gross income, add your tax-exempt interest, and add half of your Social Security benefits. If that number is over the threshold, you need to set aside money for taxes immediately. Do not spend your refund before you know if you owe taxes on your benefits. There is a subsection to rule number 3 regarding state taxes. While the federal rule is strict, many states are changing their rules starting February 1st for the new tax year. States like Missouri, Nebraska, and West Virginia have recently eliminated or reduced taxes on Social Security. If you live in one of these states, you need to make sure your tax preparer knows the new 2026 state rules. Do not let them use last year's software logic. You might be eligible for a full exemption on your state return even if you owe federal taxes. This is money that belongs in your pocket. Rule number 3 is about awareness. You must aggressively claim these new state exemptions because the state will not automatically give them to you if you don't check the box. Now let's talk about the earnings test enforcement. This is a rule that technically starts in January, but enforcement often hits in February. If you are under full retirement age and you are working while collecting benefits, the limit for 2026 is $24,480. If you go over this, they take back $1 for every $2 you earn. Here's the warning. The SSA receives W-2 data from employers in late January. By February 1st, their computers start matching your payroll data against your benefit payments. If you exceeded the limit last year, or if you are on track to exceed it this month, you will receive a notice of overpayment in February. They won't just ask for the money back. They will slash your check to zero until the debt is paid. If you are working, check your pay stubs right now. Are you on pace to hit $24,480? If you are, you need to either cut your hours or contact the SSA to adjust your withholding. Do not wait for them to catch you. If you self-report, they are lenient. If they catch you via the computer match, they are aggressive. I also want to address the overpayment waiver rule change. This is a bit of good news amidst the warnings. Starting this year, the SSA has made it easier to request a waiver if they claim they paid you too much. In the past, the form was 15 pages long and required you to list every grocery bill. The new simplified waiver request is much shorter. If you get a scary letter in February saying you owe us $10,000, do not panic. Use the new no-fault rule. If the mistake was theirs, and you cannot afford to pay it back, you can file the waiver. The new rule shifts the burden of proof slightly in your favor, but you must act quickly. You have 60 days to file the appeal to stop them from garnishing your check. If you ignore the letter in February, the garnishment starts in March. Rule number 3 is, open your mail. Do not let fear keep the envelope sealed. Let's go back to the SSA situation because I cannot stress the gap enough. The period between January 30th and February 27th is exactly 28 days. This is manageable if you budget. But looking ahead to May, the gap gets even weirder. This Friday's payment is a test run for your discipline. I want you to take cash out of the bank if you have to. Put the money for the last week of February in an envelope marked "Do Not Touch." Visualizing the money helps. When it sits in a debit card account, it feels infinite until it is gone. When it is physical cash in an envelope, you see it shrinking. For seniors on fixed incomes, the envelope system is the best defense against the calendar shifts. What about the COLA cliff for SNAP beneficiaries? This is part of the rule number 3 ecosystem. Because your Social Security income went up in January, your food stamp eligibility is being recalculated in February. Many states run their automated recertification batches on February 1st. You might go to the grocery store on Sunday, try to use your EBT card, and find that the balance is lower than you thought. This is because the state computer saw your COLA increase and automatically lowered your SNAP benefit. This is legal, but it is cruel. You need to log into your state's SNAP portal this weekend and verify your February amount. Do not assume it is the same as December. If it has dropped significantly more than the COLA increase, you need to file an appeal based on increased medical expenses. Did your Part D drug costs go up? Did your rent go up? You can use these expenses to fight the SNAP reduction. But you have to fight for it. You have to file the paperwork. Let's discuss the Direct Express card changes. The vendor that manages Direct Express is under pressure to improve security. Starting in February, you may see new prompts when you call customer service requiring voice authentication or stricter PIN requirements. If you have not updated your phone number with Direct Express, you might get locked out of your account when these security updates roll out. Rule number 2 applies here too. Ensure your contact info is current. If they send a verification code to a landline that doesn't accept texts or an old cell phone you threw away, you will be cut off from your money. Call the number on the back of your card this week and say "Update contact info." It takes 2 minutes and saves you a week of panic. I want to touch on the scam pandemic targeting these February dates. We talked about the text messages, but there is also a mail scam involving the SSA 1099 tax form. Scammers are mailing fake tax forms that look like Social Security documents. They ask you to detach and return a portion of the form with a processing fee to file your exemption. This is fake. You never have to pay to receive your tax forms. You never have to pay the SSA to file a form. If you get a letter asking for a check to process your COLA or file your taxes, throw it in the trash. The official SSA 1099 is free. The official filing is free. Rule number 3 is, the SSA does not charge fees for basic services. Anyone asking for a fee is a predator. For those of you who are snowbirds traveling south for February, the TSA rule applies to you doubly. If you are flying home in February, make sure you have your documents. But also, make sure your mail is being forwarded correctly. The SSA stops payments if they receive a returned mail notification from the post office. If you went to Florida but didn't set up a temporary address or a hold, and your SSA 1099 form bounces back to the SSA, their computer assumes you are dead or missing. They will suspend your direct deposit to protect the funds. This is a common February disaster. If you are traveling, call the SSA and give them your temporary address, or ensure your USPS forwarding is bulletproof. A returned letter can freeze your bank account faster than anything else. Let's review the action plan for this weekend so you are completely safe. First, on Friday, January 30th, check your bank account. Verify that your SSI payment has arrived. Verify the amount. If it is there, pay your rent immediately. Second, on Saturday, January 31st, gather your travel documents. Check your ID expiration dates. Check your name matching. Put the $30 for a passport card in the mail if you haven't yet. Third, on Sunday, February 1st, sit down with your tax papers. Look at your 1099s. Do the provisional income math. Know if you are in the danger zone before you go to the accountant. Fourth, check your SNAP balance online. See if the COLA cut your food stamps. If it did, start gathering your medical receipts to file an appeal. I know this feels like a lot of rules. It feels like the system is tightening around you. And in many ways, it is. The government is using technology to enforce rules that used to be loose. They are matching names, matching incomes, and enforcing deadlines with computer precision. This leaves no room for error. But you have an advantage. You are watching this. You know the rules. You know that Friday is payday, not Sunday. You know that Bob doesn't work at the airport anymore. You know that provisional income is the secret tax number. By knowing these 3 rules, you are insulating yourself from the chaos. You are protecting your retirement. We will be here on Friday morning to track the SSI deposits as they hit. We will be here on Monday to report on the first day of the new TSA enforcement. If there are lines out the door, we will tell you. If the payment system crashes, we will tell you. You are part of a community that looks out for each other, so take a deep breath. Prepare your documents, watch your bank account, and do not let February 1st surprise you. You are ready. Stay safe, stay warm, and I will see you in the next update.